Hi, welcome to this video discussing the variable production overhead variances. There are two different types of variable production overhead variances. One is the expenditure variance and the other is the efficiency variance. When you're dealing with variable production overhead variances, it's very important to understand the time that is required or expected for production, that is the time in number of hours, as well as the overhead absorption rate, that is OAR. So you need to familiarize yourself with these two concepts before you can calculate these variances. So moving on, the two variances that we have is the expenditure and efficiency variance. The expenditure variance talks about the actual cost of or the actual variable production overhead cost that was incurred compared to the overhead cost that should have been incurred for the actual hours worked based on your standard overhead absorption rate. Once again, I'll repeat, this is a difference between the actual cost, that is the actual production overheads, variable overheads incurred, and what should have been incurred as a result of your standard overhead absorption rate and the actual hours worked. The other one is the efficiency variance. This is where you're calculating the difference between the number of hours it should have taken to produce the actual quantity compared to the actual number of hours it took to produce the actual quantity, and then you quantify it using your standard rate per hour, that is your standard overhead absorption rate. In both the cases, when you're considering or when we use the terms actual hours, we are actually talking about the actual hours worked, not the actual hours paid. So if there are any idle hours in the actual hours paid, we will get rid of those idle hours and then we'll consider only the actual hours that were worked by the laborers. So let's have a look at this with an example and understand it better. We have an example here where it says the variable production overhead cost of a product called LW is as follows. It takes 2 hours to produce 1 unit of this product LW, and the overhead absorption rate per hour is $1.5 or $3 per unit because it takes 2 hours to produce 1 unit. So remember, your overhead absorption rate per hour over here is $1.5. During a period, 1500 units of LW were made. So this is your actual production, that is $150. So this is actual production. The labor force worked for 3080 hours, of which 100 were recorded as idle time. That means out of this 3080 hours, 100 hours they were not working. This was idle. The variable overhead cost incurred was $4,540. So this was the actual overheads incurred. So based on this information, we can now calculate the expenditure variance and the efficiency variance. So expenditure variance here, first of all, remember we are only going to consider the actual hours worked. So out of 3080 hours, 100 were idle. So that means the actual hours worked were how many? 2980 hours. Now your standard rate of variable overhead or your overhead absorption rate was how much per hour? $1.5 per hour. Hence, the variable overheads should have been for 2980 hours. It should have been how much? If you calculate this, you should get $4,470. So based on our overhead absorption rate of $1.5 per hour and 2980 actual hours worked, our overheads should have been 4,470. But they were actually how much? $4,540. That means in reality, we have incurred more production overheads than what we should have or what we had absorbed. And this difference between 4,540 and 4,470 is $70. And because we have incurred more, this is an adverse variance. So it's this simple calculation. Always remember, you need to know your overhead absorption rate per hour, know the actual hours worked, and how do you calculate the actual hours? Get rid of the idle hours from the total hours worked or total hours paid. Then For the actual hours worked multiplied by overhead absorption rate, this is what the cost should have been, but this is what it really was, and the actual cost was more by $70, hence $70 adverse. So this is your expenditure variance. Moving on to efficiency variance. In reality, 1500 units were produced, and the example told us that it takes 2 hours to produce every unit. So 1500 units should have taken 1500 into 2, that is 3000 hours. But in reality, how many hours did we actually take? Out of 3080, again 100 hours were idle. So in reality, we took only 2980 hours. That means we took 20 hours less. That means 20 hours favorable, because instead of taking 3000 hours, we took only 2980 hours. Then our standard rate of absorption was $1.5 per hour, and hence our efficiency variance will be 1.5 into 20, that is $30 favorable. And in this simple way, we calculate the efficiency variance. So once again, you've calculated two variances over here, the expenditure variance and the efficiency variance. Expenditure variance was a comparison of what your actual variable production overhead was compared to what it should have been at your standard overhead absorption rate multiplied into the actual hours worked. Whereas in the efficiency variance, we are looking at the number of hours that it should have taken to produce the actual number of units produced compared to the actual time taken, and difference multiplied by again your overhead absorption rate. And once again, when you're considering the actual hours worked, get rid of the idle hours, only consider the actual hours worked. So hope this example explained clearly the two variances, that is your variable expenditure and variable efficiency production overhead variances. If you have any questions, please email me. Don't forget to subscribe to my channel and share the link with your friends. In my next video, I'll be talking about the specific variances which are relevant to F5 now. Thank you very much.